All right, mic check. Good to go. All right. Welcome back to GSK Wealth Builders. It's Sam from GSK Wealth Builders, and today I'm going to be talking about just the math behind why I invest in crypto markets way more than I do in the stock markets, and just the math behind it. So there is a lot of proof of how the crypto market moves versus the way that the stock market moves, and that's what I'm going with. And I just wanted to show you this findings because not everyone realizes that crypto, I think, is going to be the opportunity of a lifetime for people that have small amounts of money to invest, to turn that into life-changing amounts of money. So and the reason is just the velocity of money, right? The amount of capital that is moving into this one market and the amount of people that are focused on this market is unbelievable. So we're just going to go through an exercise, go through the data, and I'll show you why crypto is better than stocks, in my opinion, when it comes to returns, but the risk is higher too. Like the risk of loss is higher, but the risk of returns is like 10 times greater than stocks. So I've been, just a little bit about me. I've been investing in stocks since I was in grade six. So in grade six is I had a teacher that made us in the class teach us the stock market, how to buy different companies. So back then, I remember PayPal was really big. PayPal, eBay, Electronic Arts, these were all really big companies that still exist today, and they've done multiple, X returns. Now in crypto, you can get the returns of PayPal from, 19, let's say 1996 till now. You can do that in 1 year in crypto, which is what is great. Now you can also lose, 99% of your investment, but to me, you just put a certain amount of capital that you're willing to lose. And if it does well, it does really well, then you can make bigger bets over time as that capital grows. And then you can go from there. So I'm just going to walk you through the process of what I do in the stock market. When I'm looking at stocks, I'm going to walk you through the process of what I do in the stock market, and I'm going to show you how I take that and I apply it to crypto. So we'll go over the crypto market right now. So we're seeing, okay, the market is at $2.9 trillion. Let me move to my next screen here. Okay, so the crypto market is $2.9 trillion right now. And let me configure this video 1 second. Get the brightness up. Okay. A little bit of contrast. Okay. Okay, so right now Bitcoin is at 64,000. Let me change this screen a little bit. Okay, so right now Bitcoin is sitting at 64,000. We have Ethereum at 45.54. Got Binance Coin at 646. Binance is almost at all-time highs. Solana at 233. I think all-time highs around 250, 260. It's been on a downtrend, but Solana's been strong. It's up almost 10x in the last 9 months. Cardano's sitting at $2. It's been there for a while. And then some other noticeable coins: Terra Luna, Avalanche sitting at $92. Chainlink is still doing well. Polygon, Axie Infinity. So Axie Infinity is down 10% on the week. So now if you just look at the overall trend for the last 7 days, you have, Cadena doing really well, helium up 40%. So helium sitting at $52. That is one of my top three coins. So my top three coins are Hex, helium, and Solana. And as you can see, they're doing, helium's doing very well in the last, year. Crypto.com coin up 23% on the week. So you have a bunch of coins that are up very well on the week. Now I just want to see what the biggest losers. So the biggest losers of the week: Omi's Go, SafeMoon, ARWeave, Engine, Cosmo, Theta, Polkadot. So Polkadot, I'm not sure why it's down on the week, because they have the parachain auctions. Maybe it's because people are selling their Polkadot, but I thought you're supposed to use DOT in the parachain auctions, which would make it, it would make it more valuable. So, yeah. So Des, yeah, what's going on? What's going on, man? So, yeah, Theta sitting there at number 89, 33 cents. We have Axie Infinity, so I'm very bullish on gaming tokens. So I've been doing a lot of research on gaming tokens right now, and I want to see what other gaming platforms we could have other than Axie Infinity do really well. So that is the update of the crypto market right now. So what I would say is just keep an eye on your coins that are in a dip right now, and maybe you want to buy the dip before it goes back up. So we'll go back to the top market cap coins because I want to look at Solana. Okay, so Solana is sitting at $233. Now what I want to look at is just the last, okay. So if you look at the last hour, it's down 1%. Last 24 hours, 1.4. 7 days, it's down about 10% in the last 7 days. But in the last 2 weeks, it's up 20%. A month is up 55%. So you really can't complain if you're holding Solana. And on the year, you're up, 11,000% just by buying and holding Solana for 1 year. So like I mentioned, this is one of the reasons why I'm in crypto more than stocks. I actually sold a lot of my stock portfolio where I was trading. Like I had a little trading stock portfolio. I just sold all of that and I'm putting it into crypto and buying and holding. So one thing is, when you go from stocks, you have to be very active. You have to be very active to avoid drawdowns and to have asymmetrical risk reward or gains on the year. You could be spending hours per day just looking at the volatility, the price, the volume of all these different stocks, what market regime we're in. Like, for example, is inflation going to affect stocks? You don't have to do that in crypto. You just have to find and research a solid project. You buy it, you hold it, and then you can get, what you could do in 10 years of day trading or 10 years of swing trading in stocks or options trading. Is what you can do, in crypto, just by buying and setting it and forgetting it. And the only thing you have to do is update your outlook every once in a while to see if things are going right. So that is one of the things that I like about crypto. So one other thing, is it too late for Solana? It's not too late for Solana at this point. I think what's going to happen is there is going to be a lot of VC investors that put, $100 million in Solana. Now they have $1 billion. They're going to sell their positions to fund their other businesses and fund other investments. But as far as long term, if Solana 3 years from now, way better, because everyone's going at the gas, right? So the gas is crazy on Solana. I mean, the gas is crazy on Ethereum right now, and there's only two things that I can see solving it. So Moonbeam and Moonriver, because they're EVM compatible, very similar to Binance. So you could just take your Ethereum project and move it to Moonbeam and Moonriver. Then you have Solana, where you just build a new project in a completely different platform. But the thing is, you're using Solidity on Ethereum. You're using Rust, I believe, or Go and all these other different platforms for Solana. I'm not sure what the languages are, but I know it's different than Solidity. So you have to change your dev team. You might even have to change your engineers. Where with Moonriver and Moonbeam, you can just move it over. And so I can see people going on Moonbeam instead of yeah, instead of using Solana. So another thing is, let's get into the stocks. So let's go and look at historical data from stocks. So normally what I do, let me switch my screen again. So normally what I do for stocks is I would look at the volatility today. So if I'm looking to trade stocks today, I want to know what the volatility is today because maybe it might not be the right time. So I would go to Yahoo. So I would go to Yahoo Finance. Okay, so I'd go to Yahoo Finance, right? And then you're going to see up top here, you have the S&P 500, you have the Dow 30, you have the NASDAQ, and then you have the Russell 2000 up there. And then usually what they do is they show the VIX. They're showing crude oil, gold, so gold's at $1,800, silver's doing well, Bitcoin, US dollar. They don't have the VIX, so the VIX is here. So the VIX, the volatility index, is at 16, so fairly steady, I'll say, for now, because we've had, turbulent times in the past year where the VIX was like at 80 or something like that. So, yeah, you can see March 2020, we're at 66 VIX. Maybe it was the NASDAQ that was at 80. But yeah, 66 VIX. And yeah, so now what I'm going to do is I'm going to look at the S&P 500. So this is what I'm doing. I'm going to evaluate the average returns of the S&P 500 daily if I was to trade the S&P 500 and other stocks daily, which is just a basket of, the best or the largest stocks in America, or actually globally. So, okay, so then I would go to historical data, typically, right? And then I would download this data. So you actually have the data, the daily data, the weekly, even the monthly data for the S&P 500 from the beginning of the time that they were recording it, right? So what it's going to show you is the open price of the S&P 500, the high, the low, and the close, and then the volume. So if you can see here, November 12th was, or November 11th, Remembrance Day, right? So Remembrance Day, the volume of the S&P 500 was 2.6, trillion. Is that 600? No, 2.6 billion of the S&P 500. But if you look at every other day during the week, it was 3.5, 3.1, 3.4. So you can just see the volume. Now, what I'm going to do is I'm going to go to a different website called Stook, because you can download the historical data of the S&P 500. So I want to get the daily data of the S&P 500. So I'm going to download it. I'm going to show it. And I'm going to download the data in a CSV file. Okay, the download is complete. So this is going to be more statistical analysis, right? Okay. So I just got to add my screen because I need to add my Excel. So you can see my Excel screen. So immediate source. Oh, window capture. There we go. Okay. Okay. So let me adjust the screen a little bit. Okay. Now I'll zoom in and just make it a little bit bigger just so you can see what's going on. So what I'm doing is I'm taking the data from the S&P 500, which is the historical returns, and what I'm going to do is calculate what the daily returns of the S&P 500 is. So like I said, you have the, let me clean this data up for a second. So, because I need to make it larger. Okay, so the title will make that bold. The rest we will make, say 14. See how that looks. Okay, 14 looks pretty good. All right, so then what I'm going to do is I'm going to add another column. Oops. So I'm going to add another column called returns. So this is going to be the return for the daily, right? Daily return. So what you can do is you can actually pull this data anytime you want to see what's going on in the market, and you can just compare the last 30 days to what the historical averages are once I'm done. So then I'm going to go to sort this. Oops. I just want to make these in caps. Oh my gosh. Okay. So we have the date, we have the open, we have the high, the low of the S&P 500, the close. So the very first time it traded in 1971, it opened at 92.15 and it closed at 91.15. So it was down, right? And then the daily return is going to be the close, subtract the open divided by the close. So it's going to be the close, subtract the open, divided by the close, and then I got to put those in brackets. So the daily return of that, do I want that in a percentage? Okay, so the daily return and the volume, I want the volume to be with commas. Right, so then these should all be dollars. Geez, some light just came through. Okay, so we got the date, the open, the high, the close, the volume, daily return. Okay, I'm going to make this slightly bigger. 16. Okay, so that looks good. The volume grows. Okay, so then the daily return, if you just double click, you can do it for all 1,200 entries. So in total, we have 1,200 days, 1,200 days of market trading, which is over, what, 40 years, 40, 50 years, 80, 92,000. Yeah, 50 years of day trading. So the daily return, if you just hover over it, the average daily return was 0.0002% for the day. Okay, so now what I want to do next is I want to create a data set so that I can analyze this. So I'm going to create it in what's called bins. So I'm going to do bin, and then I'm going to create a data set. So it's going to be 0.02, which is 2%, 0.015, Yep. So I highlight these two. Actually, these are going to be negative. So negative 2%. And then we're going to go up by 0.5% per bin. And what it's going to do is it's going to categorize every single day into a specific bin, because the S&P 500 doesn't really move more than 3% often. Okay. And then negative 0.03, just in case, and positive 0.03. Okay, so 0.5%. So 0. Okay, so basically we have categories now. So we have 0, a gain of 0.5%, a gain of 1%, a gain of 1.5%, a gain of 2%, a gain of 3%. And actually, I'm going to take the 1.5. 1, 2, 3. Yeah. I'm going to take the 1.5% out because that's just too much. Okay, so that's my data set that I want to sort this information with, right? So basically, when you scroll through this data of the S&P 500 gains, right, you really have nothing better than a 1% gain overall, right? Now, what we're going to do is we're going to predict the probability of having a, 0, 0.5%, 1%, 2%, 3% day is in the S&P 500, because this is what day traders are trying to trade. They're trying to trade stocks that are more volatile than the S&P 500. But what is the odds that you can, right? What is the odds that you can pick the exact top and the exact bottom, and say it's the daily return was 0.71%? That's from you going from the exact bottom to the exact top. To just get 0.71% for the day, then you're going to minus your fees, your trading fees. So it's actually very hard to trade, but we can actually statistically prove this in the model. So that's what I'm going to do. Just 1 second. Just going to check my phone just to make sure this is working. Okay. So yeah, we're going to statistically prove this in the model. So now we have the bin, right? So now we have the bin. So now we're going to go to a tool in Excel that is called data analysis, and then we're going to do a histogram. Okay. So you go to data analysis. You might have to add that. Just Google how to add data analysis. And what I want is a histogram. So the input range is going to be the whole 1,200 pieces of data that I have. Oops. Do this again. Shouldn't have hit enter. And these columns have to be wider because the S&P 500 is multiple digits now. Okay. All right, so once again, you go data analysis, histogram. The input range is the 1,200. The bin range is the bins that I created, right? So the percentages. And then the output range is going to be custom, and I want it to be right here, right by the bin. And the type of histogram should be fine. Okay. Just move that. All right, let me check the screen. Okay, so now what we have is some frequency. Let me make that bigger. So the font size is 16. So normally when you see me make a pick on a crypto or a stock, it's because I've done a lot of extensive research on this crypto and stock, right? Before I even think about putting some money in. And I don't share this research all the time, but I'm trying to make it more available. Okay, so now we have the frequency. So range, probability, and cumulative. So range. Okay, so range, probability, and cumulative. Okay, so just to go over these numbers so that you know what they are. So the S&P 500, out of 50 years, right, there was 12,000 days of trading. And over that 50 years, 3,000 days had zero gain, right? Between 0 and 0.49 gain. 3,000 days had, between 0 and 0.5% gain. 1,500 days had between 0 and 0.5% loss, right? So this is what's happening. There was only 200 days. In 50 years, there was only 214 days where you had a 3% gain. So the odds are against day trading, right? If you're trying to day trade, you're trying to do a lot of size, it's really hard because you only have, in 50 years, there was 200 days. There's 200 days where you could have had a 3% gain on the S&P 500. Now, if you use options to juice it up, sure. Now the range. So the range is just me describing this number in the bin to a normal human. So it's going to be negative 3% to negative 2%, and it has to be described as a text. I got to change all of these to text. Okay, so I'm going to just describe it. So negative 3% to negative 2%. And then this is negative 2% to negative 1%. And this is negative 1% to negative 0.5%. And then this is negative 0.5% to 0. And this is 0 gain. Right? And then this is 0 to 0.5%. This is 0.5% to 1%. This is 1% to 2%. 2% to 3%. So let me just turn this into something a little bit nicer. That makes sense so far? Yeah. So Des, inflation is 5 to 6%, isn't it? Yes, but this is the daily return, right? But yeah, inflation is so if the government is saying inflation is 5 to 6%. However, the amount of inflation that we've had, actually, the way that the government calculated inflation changed in 1980, and I believe it kept changing like 3 or 4 times. So what they would do is they would say, we're going to take housing prices, gas, food, entertainment, all of that. We're going to make a basket of goods and services that the average person buys. And then what happened was inflation was too high, right? So they were like, how do we skew this? So what they did was, for example, the house that I'm in, I own the house. So what they do is they ask average people, how much would you pay to rent Sam's house? Not how much does it go on Kijiji or how much does it go online? How much would you pay to rent Sam's house? And if the person says, I'd rent his house for $800 a month, when the market is $3,000 a month in my area, right? Well, then they put that in there. So the data is very skewed because the sources are very skewed, right? But yeah, they want us to believe inflation is 5 to 6%, but it's not. So what you're seeing right here is I'm pulling the data from the stock market. And the stock market is the sum of goods and services traded in that are listed publicly. So you have Amazon included in this. You have Apple, you have Google, you have Facebook, you have Netflix, you have Microsoft. All of these different companies are included in the S&P 500. So we can actually use this to not predict what the economy is doing, but you can use this data to just give you some insight on what's actually going on in the markets, the public markets, which are different, right? So yeah, that's a good point, Des. Okay, so now the probability, right? So we know that, let me see here. Insert. Let me insert a row. If you have any questions, just let me know. But it has to be related to this. Okay, so we know that in total, we're going to have how many records? We're gonna have equals sum. Right, so we have 12,381. Yeah, we have 12,381 entries that we're going through, right? So then what we can do is we can see what the frequency or the probability is expressed as a percentage, right, of you having a 3% day in the S&P 500. So equals this divide by this. Okay, so that's probably rounded up. Yeah. No, didn't work. 1 second. So we want J1 to be static. So you can put these in to make it static. Okay. And then cumulative is just, I'm going to be adding them together. So equals this equals perfect. Okay. How are we for time? 16 minutes in. They want us to believe that. What's your take on NFTs? I don't have a take. People are making money. People are making a lot of money in NFTs, but we're not talking about that right now. And then Makola, I think he's giving me the dab. So yeah, what's up, everyone? So okay. So what we have is the S&P 500, right? The odds of you having a 3% day is 0.86%. The odds of you having or a negative 3% day, the odds of you having a negative 1 point or a positive 3% day is 1.67%. The odds of you having a 0% gain, 25% of the time that you trade, you're going to have a 0% gain in the S&P 500. So you trade 5 days a week, right? 1.5 days or 1.25 days a week is zero gain in the S&P 500, right? And then if you add a negative, 12% is going to be negative. It's crazy, right? So for you to be a trader, these figures are for stocks. Crypto, okay? So the S&P 500 averages 8% per year. Bitcoin averages 200% per year since inception. If you just held, Bitcoin has done a 6.5 million% return, right? So Bitcoin has gone from 1 cent. Is it 1 cent? Yeah, from 1 cent to what, $65,000 US, 6.5 million% return. Where the S&P 500 in the last 10 years, in the last 10 years, we're probably looking at, we can find that out. So let's see, there's 250 trading days in a year. So 2,500 days. Okay, so let me sort these first. So data, sort, oops, filter. So I want newest to oldest. Okay, so let's just look at, so like I said, so this is my statement, right? So Bitcoin, I just said Bitcoin did 200% per year going back 10 years, right? And Bitcoin is king in this exercise because we can't go back that far for Ethereum and all these other coins, right? They're like 1 to 3 years old. Bitcoin is the largest set of data that we have, right? So if we're saying, Bitcoin equals 200% per year return, right? SP 500 so we're going to do some returns. Just 1 second. Okay, so first we're going to do some statistics. So now we go back to data analysis and we go to descriptive statistics. And the input range is going to be the daily return. And then the output range is going to be right there. And then what we're going to do is summary statistics. Okay, so we go to the summary of statistics. There you go. Do you include gold would not be considered in the S&P 500, however, gold mining companies would be considered in the S&P 500, right? And the average historical returns of gold, you can do, so this, what I'm doing here, you can download any stock, you can download any commodity, download the data and get this information too. So what I would expect in gold is to have more volatility, right? In the hypothesis, but now we're just looking at the statistics. So right now, like I could do this for Amazon if I wanted and get the exact same data, but it would just be different. Okay, so the mean expressed as a percentage is 2%, 0.02%. Okay, so let me move this up higher so you can see it because I think I'm blocking it. Yeah, I am blocking a little bit. Okay, so if Bitcoin is returning 200% per year, the mean, so the average return in the S&P 500 in the last 50 years is 0.02% gain, right? Because the S&P 500 does go up over time. We do know that, right? But it's 0.02% gain. So then the median, which would be the middle number, right? Which is actually more accurate than the average. So let's see what that is as a percentage. It is probably 0.04. Yeah. Yeah. So 0.05, we'll do 2 decimals. So 0.05% gain is the median. So because the median is higher, let me see here. So if the values, so because the median is higher than the mean, there are more values above the mean. So there's more values above the average than there is below, right? And so that means that the values below the mean or below the average are more extreme. So there are more up days, right? There are more up days than down days in the S&P 500 because the S&P 500 goes up over time. However, the average down day is larger than the average up day because there's less of them. So, okay, and the next is the standard deviation. So the standard deviation measures the dispersion of normal data, right? So normal data in a standard deviation would be 68%, would be like the bell curve, right? So 68% would be the normal data. And then, so what it's showing is how skewed the standard deviation is. So it's 0.1. So that means that most of the data is actually, this data is skewed, basically, right? So kurtosis. So kurtosis is the measure of like the peaks and tails of the data. So because the kurtosis is at 38, it should be at 1, right? It means that there's very high peaks and fat tails. So high peaks, fat tails, like with the data. The skewedness, where's the skewedness now? Negative 1.5. So that means that the negative movements are more extreme than the positive movements. They're larger than the positive movements, right? Then the range is the difference between the lowest daily return and the highest daily return, right? So the range, like between the lowest return and the highest, is 0.36, right? So that's what you're trying to trade in there. And then the minimum and the max, right? So negative 0.25 to negative 0.1. So there you go. And then there's 1,200 pieces of data there. So this just shows what's going on. Okay. So now we'll go to average returns. So let's just move this over here, let's say. Okay, so we'll go to average returns now of the S&P 500. So if we go here with the data, we're going to have the average positive, the average negative, the frequency percentage. So average gain day, average loss. Oops. So the average gain. So what I'm going to do with this data is I'm just going to say filter numbers greater than 0. That's going to filter half of them, right? So the average gain was 0.00675. Okay, and then we can filter it again. So we can filter numbers less than or equal to less than 0. And the average loss is negative 0.07186. Zero, zero. So what you do is you just put your thing over your mouse over the data. So 0.007186. So like we said in that standard deviation where we're showing the data, the average gain, right? The average loss is greater than the average gain. That's risky, right? So if you have a losing day, you're actually going to lose more than if you have an up day, which is why it's risky to trade, right? Because if you hold over time, you're gonna beat the market. But if you're not holding, you're actually going to have really bad days when you have a losing day. And that's what's discouraging because trading is mental. And if you're having a really bad down day, it's hard to come back with a really good day. It takes skill because what's going to happen is you're going to try and make up for your gains. Okay, so how many days? So frequency. So let's just add another column up top. So how many negative days were there? There were 6,005. 6,005 negative days. Right? So there's 6,005 negative days. And gain days, there was greater than 0. 6,778. Oh, see what happened there. Six, 7, 7, 8. Okay, so we can calculate the percentage, which is this by this. They add up. And the average return. So to calculate the average return, we got a filter. Equals average 1 Okay, so the formula is that is equals average 1, and then you take all the data from the positive returns, right? So the average positive return is 0.03. Okay, so then we're going to go filter numbers less than 0. We'll just put it here. So equals 1. 1, comma. Interesting. So we're going to have to use 3 decimals. Well, this is proving the average loss is not greater. The average loss is not greater. Okay. So you're trading every day. 53% of the time, you're going to have a gain. 47% of the time, you're going to have a loss. When you have that average gain, it's going to be 0.28%. And when you have the loss, when you have that gain, it's going to be 0.29%. When you have the loss, it's going to be 0.28%. So yeah. What's up, Mason? What's going on? I'm just doing some review on stock trading and data analysis of stock trading, right? So, okay, now let's calculate 10-year returns. Let's calculate 10-year returns of stocks. Standard deviations, blah, blah, blah. Okay, the last 30 days. So we'll do the stock market last 30 days. SP 500, S&P 500, 30 days. Okay, so this is going to be simple. You have no filter, right? And this is November 11th, November 12th. So this is going to be equals sum of, it's actually 20 days. There's 20 trading days in a month, I believe. Let's see here. So 22. So from 3 to 22. Okay, so from G2 to 20. G2 to 20 is 19 days. We need one more. Okay, so the last 30 days, the S&P 500 has done. Francois, what's up? Where are you guys from? Mason, I know Des is from Quebec. Mason and Francois, where are you guys from? Okay, so the S&P 500 in the last 30 days has done 3.4%. Let's go see what Bitcoin did in the last 30 days. So Bitcoin in the last 30 days at 11%. In the last year, it did 290%. So 30 days at 11%, right? And then in 300 trading days, I guess. 1 year is 250 trading days, I guess. 250 days. So was 300 and what? 290 though, 293%. Okay. Right, so in the last 30 days, Bitcoin did 11% gain. S&P 500 did 3.43%. In the last year, we can see what the S&P 500 did. You know what? It had a really good, like one of the greatest years of all time. 40%. 40.84. Say 41%. That's a record year, right? If you go back a year, that's a record year. So, Mason, you're from Markham, just outside of Toronto. Suntan Superman. Oh, what's up? Yeah, man. Nice talking to you in the group chat. And then Francois, Denmark. Well, hello. How's it going in Denmark? I heard it's really nice there. I have a friend that moved there actually. He got married and he moved to Denmark. So, because that's where his wife was from. So, Okay, so we're comparing these returns, right? So we have Bitcoin. Let me just put a box around that. So it's starting to become obvious, right? Why I sold my stocks to buy crypto, which is, you have Bitcoin here sitting at what, 11% on 30 days, and then in 300% on the year, right? And then S&P 500 3%, and then 41%. So it's kind of obvious. Now, if we go to, let's do 10 years. No, so we did 1 year, 3 years. We'll do 3 years, 5 and 10. No, we'll do 3 year, and we'll do 10 year. Because we're running out of space. Okay. Okay, so Bitcoin, 3-year return. That's going to be hard to find, anyways. So S&P 500, not hard, but like you just can't calculate it. S&P 500 is 3 years equals 750 days. So actually, I should have calculated that. So never mind, 250. So we're going to sum G2 to G. Let's see if it works. 251. Let's see what date G251 is. So that online thing that I Googled is wrong. Yeah. So 251 days was around November 17th. Now I'm going to have to double check this. S&P 500 1-year return. %40. Yeah, it is 40% though. Weird. Oh, the stock. Yeah. Okay. So this stock, the S&P 500 index. So Pfizer, future pump stocks? If not, I agree with you. Pfizer's done $100 billion in sales. So what their stock is doing, I have no idea, but I highly doubt Pfizer stock is going to beat even Bitcoin. It can't beat Solana. Solana's up, 1,200%, right? So I'm going to move this back to 40% because there's something wrong with these return. Actually, no, we're just going to go with the data. So the S&P 500 index has moved 14%. Because you invest in the index, not the actual market. So S&P 500 index is in 14%. So now the next one is going to be 751. G2 to G. 19% in 3 years. Not doing great. And then 10 years is going to be 2,500 days. 2501. Okay, Bitcoin 3-year return. Mm, the mean annual return is actually higher than 200% now. The mean annual return is 408%. The max annual return is 1,300. So Bitcoin 3-year return. It's brutal finding these returns. It's hard to find data that is accurate. You have to manually calculate it. Because after 1 year, they don't do nothing. All right, so this about proves enough, I would say. This about proves enough. So stocks, what it comes down to, if you're trading stocks, it is better to find a great company, buy it and hold it, because day trading, you're wasting your time. I see a lot of people online on Instagram, on on Instagram, on Facebook, on YouTube, teaching people how to trade stocks. So they'll be like, hey, do you want to learn how to do 200% return in a year, blah blah blah? Buy my program. It's $500 a month, and I'm going to teach you how to trade stocks. Earn Your Leisure, for example, really great thing. They have Market Mondays as a YouTube channel. Hundreds of thousands of people subscribe, right? And then you'll have someone like Ian say, $500 a month to join the stock club, or $500 a month to join the stock club, and $500 a month to join the crypto club. And I'll tell you, what I'm doing in the market, but it's not financial advice, but you can use it to make money. But once again, it's not financial advice, but you should, follow my thing. Because if you followed my thing, you would have made money, right? But I'm not giving you financial advice. So like, okay, so they're telling you, right, how to do this, and in 30 days, the S&P 500 is up 3%. You can switch that to the NASDAQ if you want. You can switch that to whatever you want. But, Bitcoin in 10 years, if we go to the chart, let's go to BTC USD. And that $500 a month is what you could be using to invest in crypto. If you put $500 a month into Solana, you're making way more than paying someone to give you this information, right? And yeah, there is a time and place where someone gets paid their value. But I think for the most part, this is a McDonald's sized. The solution is built like it's McDonald's. It's built like fast food. These paid groups, they're built like fast food. And so you can't be educating the masses because you're not a financial advisor, right? And then if you're not a financial advisor, you can't give financial advice, but then you tell people what to do. So I'm just going to switch screens now and go back to my browser. Why is it not working? There we go. All right, so okay, so we wanted the number for 3 years and 10 years. Just, you know what? Just 1 second, because I gotta go get something. So let me measure something, and then I have to run for 10 seconds. How do you Here. Date and price range. Okay, so if we take today, and we're going to go back, what was it, 750 days? Oops, do it reverse. Date and price range. Okay. So in 728 days, we're looking at 1,000% in 3 years. There we go. 749 days, 823%. So I'm just going to put that on my chart. 823. Okay, now we go back 10 years, which would be 2011, November 2011. We're looking at 54,000%. Your mind can't even your mind can't even compute that or think about that 54,000%. So let me switch it back to the Excel doc. Okay. Okay, so we look at stocks versus Bitcoin, right? And it's very, very obvious, right? So you're trading your stocks. You're trading your stocks by default, 53% of the time, or 47% of the time, you're going to lose, right? By default, 47% of the time, or not, you're going to lose, but you're going to have a down day. And then 53% of the time, you're going to have an up day. Okay, so now we just look at holding Bitcoin, right? Just holding Bitcoin alone. So holding Bitcoin, in the last 3 years, you're up 8x. In the last 10 years, you're up 540x, right? Now, when you look at the 3 years, 800%, I would rather put my money in just Bitcoin. If I don't own Bitcoin because I'm more risky, I'd rather just put my money in Bitcoin and see what it does for 3 years, because historically speaking, it's been winning. More people are buying, more people are adopting, but there's only 800 or 18 million coins, right? The S&P 500, I know 3 years from now could be up maybe 100%. So maybe 100%, but I doubt that, right? It'll probably be up 40% in 3 years, right? So depending on how much money they print. So just by saying, you know what, I'm going to get out of stocks, or I'm going to only hold really strong stocks like Amazon. So Amazon, I wouldn't actually hold Amazon right now. I would hold Microsoft, and I would hold Google. Yeah. So if I was going to hold stocks, my S&P 500 equivalent would be Microsoft and Google. The reason being is Microsoft, everybody working from home uses Microsoft, MS Teams, all these different suites of platforms that Microsoft owns, LinkedIn. Microsoft will always be compounding money for, 20 to 30%. Well, not always, but they are compounding money 20 to 30% annually per year. No MicroStrategy unless I want to be, no, I would not do MicroStrategy. There's ETFs in Canada. You can just buy an ETF. So then I would have Google, because YouTube, for example, I create the content for free. They run ads on my stuff. Everyone creates the content for free. They run ads on the stuff. So they have 40, 50%, 80% margin on their YouTube platform, and all the content is free. Where Netflix, you got to pay Dave Chappelle $60 million to talk for 2 hours. I'm not getting paid $60 million to talk for 2 hours. So there's just a better margin. And then there's no ads in Netflix because they just use the subscription fee. So like it's way better to do it that way. So I hope this helps. Just, this is the science why when someone's like, hey, want to trade? Even when I'm trading crypto, this is the science, right? Like, imagine if crypto is the exact same. Imagine 47% of the time you're going to lose, but when you lose, it's a 5% drop. 47% of the time you're going to lose. When you lose, it's a 12% drop, right? And when you gain, it's a 15% drop. That's really emotionally taxing for you to be able to perform great every single day. That's like, it's really hard to do. So this is just how I calculate the things every day. So then you look at, let me see here. What else do I want to talk about? The average true range. Okay. So there's another concept called the average true range. So this is just the daily returns, right? So now let's look at the average true range. So let's take the exact data here, except we're going to call it ATR. So are we still on the chart? Okay, so I need to move. I need to move. Okay. So daily return, instead we're going to call this ATR, which is average true range. So the average true range is the range between the high and the low, because that's the open and the close, right? But then you have the range between the high and the low. So if you were to buy the dip and then sell the top, what is your potential gain in the day, which is going to be completely different. So the average true range is going to be average of high minus low, divide by high, I think it is. What would be high minus low? Let's try it. Equals high minus low by low. Yeah. Okay. So now here's another, right? Here's another another thing you could look at. So you have a stock, you have a stock, right? And you have the high of the day, and then you have the low of the day. So for example, the high of the day, column 2, was 46.88, and the low of the day was 46.50. So the high minus the low is actually an 0.81% difference between the high and the low. And then the high minus the low on the next day was 0.35% difference. So then what you can do is you can see if the market's hot or not, right? So you could say in the last, say, 2 weeks, which would be 14 days, average true range, so let's say ATR in 1 week, right? 2 weeks, one month, 1 year. Okay, so there's time when the market is hot and it's actually more tradable than it is when it's not, right? And this is usually when the VIX is high, the volatility is really high, and the market's bouncing back and forth. So what I could do is I could say the last 7 days, the average is 0.69, 0.69. Okay, then I could say the last 2 weeks, which would be 14 days, the average is 0.70. So there's no variation really. And the average 1 month would actually be 20 trading days. We'll say 20 is 0.68. So why did that pop-up happen? Yep. So 1 week, 1 month. Now if we look at 1 year, say 250 days. You could do a formula for this, but it's 0.93. So it looks like the market was more volatile in the past year. The market was more volatile in the past year than it was now. So what's happening is volatility is actually going down. So as volatility goes down, day trading profits go down because now the spread, what you had these wide margins, right, of error where you could have, 0.80 in a day, but now you only have 0.69 in a day, right? And you got to be perfect. So to be perfect, really nobody's perfect. So maybe they're only 0.3 in a day. But then you take fees, then you take your time, then you take all these other things off, right? So what you can do is you could find periods of time. If you're calculating this average true range weekly, we could go to December 2020, for example. No, March 2020. Okay, right. Okay, March 2020. So if we were looking at March, right, and then we had 30 days. Or let's look at May, the average true range. So this is a way to find out if the market is hot, right? So May 2020, average true range, we look at from the 1st of May to the let's say 28th of May. The average true range in that 20 days, which is 30 calendar days, right? Which would be 1.63. So in May 2020, it actually made sense to day trade, I guess, right? Because the range is 1.63. Now in April, right? We could do 1 month in April. So 30 April to 1 April, you're looking at 2.17, right? And then in March, March 2020, you could do March 30th to March 1st, or March 2nd, I guess. 2.73. Okay, so let's take this data. We'll go back up to the top. right? So we'll go ATR. We'll do 1 month. Oops. May, April, March. Okay, so look at this. This making sense here? So Facebook Meta, no. That's a good stock. It's a good stock, but I mean, really bad situation right now. They're running from lawsuits. So 1 month ATR. So if you look at the past week in November, right, the average true range you had, if you had a perfect trade, right, if you had a perfect trade in the month of November 2021, if you had a perfect trade from top to bottom of the S&P 500, you'd do 0.69%. If you had a perfect trade in May 2020, top to bottom, like, bottom bottom to top, you had a perfect trade from bottom to top at 1.63%. But then when you had it in November, the bottom to top is much smaller. It's actually like almost one third smaller. So if you're having these wide ranges, that's when you want to trade. When you have the small ranges, that's when your profits get compressed. So all I'm showing you is ways to figure out if the market is hot to trade. So maybe you don't trade 9 months out of the year in the stock market, right? You don't put on any trades 9 months out of the year. And then once the average true range goes up, where you're doing 1 to 2% moves every single day, 1 to 2% moves, when you do options on those 1 to 2% moves, they're huge, right? So that's the way that I would look at it. So this is just my overall philosophy. So when people are asking me, I just wanted to get into some more deeper things, because when people are asking me, hey, Sam, why don't you buy Facebook? Hey, Sam, why don't you buy whatever? I'm like, yeah, because the S&P 500 is averaging what? 40% in a good year, 14%, 7%. So if Facebook is inside of that S&P 500, and maybe it's an outlier, you're not doing that great, right? So not for me anyways, right? I want to retire young. I want to retire in the next 5 years, basically. So I can retire young and still be young to do things, travel the world, teach, um, you know, live wherever I want to live, not have to work until I'm 60, right? So the only way you can do that is with juiced up returns. You have to juice up returns. Like you can't just sit there and try to get the S&P 500 giving you, 3 years, 19%, when Bitcoin's doing 3 years, 800%. So that's my philosophy on it. That's why, that's why I don't day trade. If I do buy stocks, I'm buying and holding. It makes no sense because 47% of the time you're going to lose, 53% of the time you're going to win. And on top of that, you as a human, right? So you as a human can only probably predict at best 50% win rate. So that means 50% of this 53%. So you're actually 25% accurate, right? So now you're probably losing money day trading. There are great day traders. There are guys like Warrior Trades. That guy's a wizard, but I'm not Warrior Trades. Neither are most of you, right? So um, you can learn. I would say it's easy to learn, but I would 100% of the people, 100% of the people that watch my videos can buy Solana in March 2021, right? And just wait, and it's up 10x. 100% of the people can't learn how to day trade and day trade successfully and get 10x, right? 100% of the people today in November 2021 can buy Moon River, right, at $800 million market cap. And a year from now, Moon River could be 3, 4, 5 billion, or it could be zero. But like, you have to know what you're doing, why you're doing it, how you're doing it, and how you're going to get there. So, Francois, lucky Sam, I am 59 and just starting with crypto. But you know what? One of my good friends, he is 72 years old, and he got started with crypto. Oh, I'm using my phone to film. He got started with crypto about 2 months ago. I would like to retire in 1 year. It's possible. It's possible. Anything is possible in crypto. That's the thing. Yeah, he's 72 years old. He got started in crypto about 2 months ago. I got him a helium miner because he didn't want to take risk with his capital. He didn't want to lose. So I said, put this miner in your house. We'll split the profits. And I believe the miner is doing $20 a day US, right? So it's giving him $20 a day in income. But the coin, he's witnessed the coin go from $18 to $57 in that time that it was mining. And he was like, oh, I should just bought helium too, right? And it's like it helps people believe. So with stocks, there's no way you can kind of give someone a physical stock. You can in the States, you can give people gift cards of stocks, but like it's nowhere else that I know of. So this person has learned, okay, my helium miner is working, it's generating me income, then helium's price is going up. This is a very safe way. So now he feels safer investing in crypto than he did when back in the day. Because before he would say, it's too risky for my age. If I was to lose capital at my age, it would be too risky. I can't do that. But then I showed him, okay, well, you can do it in a ways that you don't lose capital, right? $400 generates you $20 a day. And then after a month, it's all profit. So, yeah, Francois. So it says at least 2,000 US dollars per month. I hope, you know what? So with Hex, if you had, I'm generating $30 a day with Hex at the current prices. So I just don't know what that is per month. So $30 times 30, right? $900, and then helium is doing $50. It's 30. So 1,500 plus 900. So 2,400 US a month is what I'm making passively currently, right? It could go down, but that's what I'm making per month passively. So it is very possible to make 2,000 US dollars a month. Very possible. It's actually more possible than it is in stocks. Like to make $2,000 a month in stocks, you're looking at like 3% dividend maybe. So let's see. 2,000 divided by 0.03. You'd have to have 24,000 divided by 0.03. You'd have to have $800,000 in stocks at a 3% dividend, right, to be able to pull out that 3% and keep the same amount of stocks. It's really hard. You basically have to have $1 million in stocks because you're gonna have taxes and things like that. So you'd have $1 million in stocks. You generate $2,000 a month, or you could have like $100,000 in crypto, or $5,000 in miners to generate $2,000 a month. So it is very possible to retire off crypto, but you have to grow your capital. So you want to turn. My philosophy is, let me just my philosophy for crypto: 3,000 US dollars to invest max. Just 1 second. Okay, so I started with $7,000 crypto, and I probably made half a million, I would say. So okay, so here would be the plan. We try out the crypto investing plan on the safest way, right? The safest way to invest in crypto. You can't guarantee that you're going to make money, right? You can't. However, the safest way to invest is here. So let me just look at this spreadsheet. Okay, cool. So this is a blank spreadsheet. So you start with investment capital, or you start with savings, I guess. right? So you have your savings, okay? And then what you want to do is you want to turn your savings into capital. Now, what's the difference between savings and capital? Really not much difference. The main difference is capital is meant to be deployed, right? This is money that you can't be banking on, right? This is money that you can't be banking on to pay your bills in a couple months' time, right? So your savings is going to turn into capital, right? And then your capital is going to go into investments, right? And then your investments is going to have cash flow, and then your cash flow is what you use. Welcome back, Joseph Hickman. Welcome back from Newark, New Jersey. You always give great information. Thanks, Joe. I appreciate it. It's good to be back, actually, too. Okay. So, this is hard to do a flowchart in Excel, but I'm doing it. I'm doing it. Okay. Down button. I can't find it. All right. Okay. So this is the flow chart, right? So then you have income from your job. Okay, so okay, so 3,000 that I'm ready to lose, worst case scenario. Okay, I get it. So this is what it's gonna look like, right? So savings is, for me, I try to save 40%. Everyone is different, but this is just for me, right? So I have my job income come in. So my job income comes in, it's green. Oh, then you could have other incomes, right? You could have side hustle, right? Then you could have Oh, maybe rental income, right? You could rent a room. You could rent a house. You could rent a room in your house, right? You could rent a basement. So, what you want to do is you want to go from one income, right? Everyone's situation is different, but you want to try and go from one income to like three to four to five. Then you could have, so my side hustle is my 7K to 500, 3 years. 3 years. Could have been in 1 year. Could have been like 3 months, but I lost money for the first year because I was still treating crypto like it was stocks. You make 20% gain, sell. Make 50% gain, sell. Then it would do 1,000x. And I'm like, oh, where's where's the gains? But now I just hold. Like Solana is a perfect example of how you make money in crypto. So if I was a stock investor, when Solana went from $30 to $60, I would have sold like half. It went from 60 to 90, I would have sold half, right? And then what happens is when it goes 10x, you don't got much gains. Stock people are so used to losing money that they're so risk adverse. Now in crypto, what you do is you buy at $30 and it goes to 300. It's going to go to 300, right? Not it's going to go to 300, but like a good investment will go from 30 to 300 in crypto, from 300 to 3,000 in crypto, from 3,000 to 9,000. Now, so what you want to do is the beginning, though, you have to get, right, as many green checks in the beginning, right? So you got to go from one, right? So income sources. So income sources, right? You want to have the goal is to increase your income sources. YouTube is an income source. Rental properties is an income source. Doing sales is an income source. Washing cars, building decks. There is something that you are good at that other people will pay you to do, right? So you don't just want to. It depends on your time too. Have kids, whatever, but hobbies. You want to go from just having one source of income to three sources of income, right? So goal, get three sources. They can be they don't have to be active, right? They can be passive. Maybe you just go to a friend that sells. I met a guy through crypto that sells signs, right? So he sells signs to businesses. Maybe I just get a sales job, and every time I refer a business that's a new business to this sign company, the guy gives me $100, right? Then I take that $100 and I put it into crypto. So I'm turning my rental income, my job income, my side hustle income into savings, right? Then my savings is capital, investment capital. There's a difference because there's people who have savings and the second they invest, they go, oh, I need the money back, right? I need the money back. So savings is split up into different things like emergency fund. I don't know. Uh, in the States, medical. And then like, I don't know, disaster. And then retirement. So that's savings. Investment capital is like, okay. So everyone follow. So work online from internet for side hustle. Yeah, that would be amazing. So, for example, there are people, I'm not saying you should do this. I know I have a friend who, in COVID, he got, what did he get? He got 2 work-from-home jobs that didn't cost him 8 hours a day to do. So he was working from home for 2 different companies at once. This is never going to happen in the history of life, probably again, right? He got 2 different work from home jobs, and then just banked money, stayed home, cooked food, banked money. And then what he should have done is invested a significant amount into crypto. But everyone has their own risk tolerance. Everyone has their own beliefs, right? So if you had 40 to 50K, what would be your game plan to reach 500K, a million? I'll get to that, Des. That's advanced. Okay, so now we have investment capital. So our investment capital is here. The investment capital needs to be minimum 3 years. No one has held big crypto for 3 years, and done poorly, right? So I would say minimum 3 years. So what's going to happen now is you have your investments. So then your investments turn into cash flow, which is like gains selling stock, and then you reinvest and then you pay your bills. So this flow chart, I hope this flow chart makes sense to people, right? So now let's talk about how turn, let's say 10K. No, let's how to turn 1K into 5K. Because I recently did this. So anyone who's been following me for a while, so please like, share, and subscribe this, guys, because this is like the bread and butter, right? Everyone's gonna tell you, just buy this coin and make millions. Like there's a strategy to buying these coins that they're not showing you, and they need to show you this. So how to turn 1K into 5K? That's 5x, right? And then it shouldn't be how to turn 1K. Goal. So your goal is to turn 1K into 5K. So Des, if you have 40 to 50K, your goal should be to take 1K out of that 40 to 50, and turn that into 5, right? And if you did that 10 times, 10 different positions, but I wouldn't do it 10 positions. I would probably do like 3 to 5 positions max that are big. So, okay. Then goal number 1, turn 1K into 5K. Goal number 2, and for anyone who has more money, right, it would just add a 0. So this math is simplified so that you just add zeros, right? So goal number 2 would be to turn 10K into 50K. Okay? Are you following? Type 1 in the chat, or just type I'm following if you're following what I'm saying right now. Okay? Goal number 3. Goal number 3 is different because now we're talking big money, right? So goal number 3 is 20K into, this is like grand slam bet, right? Grand slam bet. So 20K into about 400K. Now, there's a difference in strategy between goal 1 and goal 3. I'll show you. Okay. So, here is, this is like the holy grail of crypto that does not work in any other market. I guess it works in stocks. So in stocks, we're going to reference stocks. I was talking about stocks. you're going to have your core portfolio of holdings. Say 90% of your portfolio is like Microsoft, Google, Amazon, Facebook, Netflix, all those, what do you call them? Blue chip. 10% of your portfolio might be options, right? Now, the reason why 10% of your portfolio is options is you want to juice up your returns, but it can only be 5 to 10% because the odds of you losing are very high. The odds of using are very, very high. So you only want to do it with 5 to 10% of your portfolio. So if it goes to zero, it doesn't. But if it hits, you might double your portfolio. Now in crypto, right, goal 1 is to turn 1K into 5K. So for that, I'm going to go to only cryptos, only crypto in the top 100. Can someone tell me why I would do that? Why would I only buy coins in the top 100 if I only had 5K? Can I get a better blue? Yeah. Okay. Safer. Yeah. Okay. So the reason why, if I want to turn 1K into 5K, and only stay in the top 100, maybe the top 200, maybe top 200, right? But I'm going to say only top 100, is because the odds of you there's 10,000 cryptos, right? There's 10,000 cryptos and 99% of them are going to zero, right? The reason is, I'll give you an example. I make a coin called Sam Coin, right? Actually, no, I'm not going to call it Sam Coin because Sam Coin would be legit. I'm making a coin called Metacoin, right? So I make Metacoin. I don't even make it. I build a website. I'm a crypto developer. I build a website and I say Metacoin is going to be killing the blockchain. It's going to be amazing, right? Then what I do is I say, send me your ETH and I give you Metacoin. So you give me ETH, I give you Metacoin. So I'm getting what? The number 2 coin in the world, and you're getting the number 9,999 coin in the world. On top of that, so I have your ETH, and I can just give myself coins. So as a developer, I can just give myself 30% of the coins, right? So then when we launch and we advertise and we go in Discord and we go on Facebook and Twitter and LinkedIn and YouTube and do lives and Ask Me Anythings and influencers and pay for advertising and Instagram ads or whatever, people want Metacoin. So all of a sudden people buy this Metacoin and it pumps 100x. So it goes from 100,000 market cap to like, what, 10 million? Whatever. So what happens is I dump my coins on your heads as the developer. I own 30% of the coins. I dump my coins on your head. So it goes back from 10 million down to 1 million. And then I'm out. So now I have your ETH that you gave me. I got the ETH that I sold the Metacoin. The Metacoin is now dead. Now, if I'm rich and I'm a developer and I got, I don't know, I got 10, $20 million in my bank account, do you think I'm going to come to work every single day and develop this Metacoin? No. I'm going to be, they're going to be, right? They're going to be drinking, smoking, like partying, doing drugs on planes, Vegas, strip clubs. Like they're going to be going crazy because it's like sudden wealth syndrome. They've never had this kind of money before. So that's why the coin just goes to zero. That's why I stay in the top 100 because the top 100, you have people like Sam Bankman-Fried. I would say he's a nerd, right? He's a nerd, Vitalik. They're nerds. I mean this in a good way, right? They have $20 billion and still go to work every single day and work 12 hours a day. These are special people, right? So Sam Bankman-Fried, who has Solana, so what did he do? He founded FTX Exchange. That's a coin. He didn't found Radium, but he worked with the Radium team, I believe. He founded Solana with the CEO. So then they built all these other platforms on it. He has $20 billion. The guy's still working every single day. So Solana is available. When I was looking at Solana, when I first mentioned Solana in my videos, you can go back. Um, Solana was probably top 20. Now it's like top 5, top 6. So I want to find something in the top 60 that moves to top 10, right? Or maybe it just stays in the same spot, but as the market cap rises, all ships rise. So all ships rise with high tides, okay? So that's my goal number 1. So I hope that explains goal number 1. Just type following if goal number 1 makes sense. So I get my 1K, I buy something like Solana, Polkadot, right? I turn the 1K into 5K. Now we can show this, right? I can show you proof of this because Coinbase, let me go into my Coinbase account. So I had a video called How to Get Started in Crypto, and I had a video like, watch me make money, doing quizzes or something like that, right? So when I did that, I'm pretty sure that day I earned $60 doing online quizzes in crypto. And this was just for people who have like zero money to show them, right? So all you had to do was KYC on Coinbase, right? And then you had to do some quizzes, which are super easy. And then once you did the quizzes, they gave you money. They gave you money to like watch this video and do quizzes. So, just 1 second. So I'm going to pull out my Coinbase account. I'm just going to see where it's at. So great, you guys are following. Coinbase.com. Yeah, I need some water. Okay. So I'm just logging into my Coinbase, then I'm going to switch my screens again. Just give me a second. And let me move this over here. Wow. Yeah. Okay. Now let me switch screens. How do I do that? Boom. Okay, so how many people watch the video how to get started in crypto or how to earn money doing quizzes? I got to like figure out what the title is, but how to get started doing crypto is what it was. Or how to get started in crypto. So let me see. Is there a history on transactions? Oh, earn and learn. So we're in Coinbase and they have something called Coinbase Earn. So right now, Clover Finance, I earned $1 to $3 with Clover, right? You can also earn money by referring friends. Notifications. Okay. Does it show my trades? They're adding a lot of coins. Recent transactions. So here on my recent transactions, as you can see, I earned Loop Ring, right? And I changed it to wrapped Luna. Why would I do that? From bounce to and converted to wrapped Luna. Okay, let me look at my balance. I must like Luna now. So what I'm holding is, oh, I do. So I'm holding Solana, Matic, and Luna. And you know what? It's up. I don't even know if it's up. So the reason why I'm holding wrapped Luna is because Luna's not there. But see, I've earned, see, learn and earn. It says I've earned $50 in crypto, right? So that's all I started with in this account is $50. 10x. That's what I'm talking about, Francois. That's what I'm talking about. How long have you been using Coinbase? I've actually been using Coinbase since 2017. But what happened is in 2017, um, my bank started blocking my deposits, so I stopped using Coinbase all time. So if we just look at my 1 year chart, right? My 1 year chart in my Coinbase, this was probably Ethereum dust. This is probably Ethereum dust that I had. Like, let me look at my. Yeah, I never had more than $500 in there and I deposit. So look here. So even here, I had 99 cents, right? 99 cents in 2017. And it's going up, it's going up, it's going up. I'm not doing nothing. I'm not even logging in. So imagine having 99 cents turn into $9. That's your 10x. Now that took 3 years, right? Now we go to 1 year. So this is my what? My $10, right? My $10 is still going up. It's still going up. It's $30. It's 30, 30. And then, yeah, so 38 goes to 60. So I'm pretty sure March is when I did all of the quizzes, right? So it went from 38 to 60, but 99 cents basically turned into $30. Like, you guys not freaking out right now? 99 cents turned into $30, right? So then I did the Coinbase quizzes. I've never deposited, remember. So 67, I jump up to 131 from April 25th to 28th. Right? So from April 25th to 28th, I made $60 or $50 doing Coinbase Earn. So now we're sitting at 131. Then what I did was I was like top coins, right? So we go back to my thing. Goal number one, turn 1K into 5K, only crypto in the top 100 market cap. So at this time in March, I believed in Matic. At that time in March, I believed in Matic. I don't believe in them as much anymore because they've pumped so hard, right? But what I did was I took everything I had that earned, so that $130, and I put it all in Matic. Then later on, I come back and I'm like, I want to convert all of my Matic into Solana, right? So I sold all of my Matic except for whatever's here. And you know what? It wasn't $60, it was something lower, right? So and I bought Solana. And let me see, can it show me my Solana transactions? Yeah, Joseph is saying 30x, mind blown. I'm not even like a super genius in this, right? So, okay. So here's the history, right? So August 24th, I bought Solana. So can someone tell me what the price of Solana was on August 24th? I know it's not what today's price. Look, the price of Solana on August 24th was $78 per Solana. Now, by the way, I had bought Solana at $30 in a completely different wallet, but we're just showing, proof. So I buy Solana at $78. And then today, what is one Solana? $240, right? So that's 4x right there. Now let's go back to assets. Let's go to Matic, because Matic is what I believed in before I believed in Solana. or Polygon. This Coinbase account, I don't know, $600 off of 99 cents, no deposits, and quizzes, right? So, okay, let's go to the Matic wallet. Look at this. So here I am, right? So I bought 99 Matic at 42 cents per Matic, right? Now, what is a Matic? I bought 99 Matic at 42 cents per Matic, and look, it's $1.71. So what's that? What's 171 divided by 40? What, 3 point something x? 1 divided by 42. Oops. So 4x. Okay, so I took Matic. So basically, we'll go back to the assets. You get the point, right? So I did the quizzes. I realized that Matic was going to pump, but it's not a high risk play. I 4x'd my Matic, right? Then I put my Matic into Solana at $78. Then Solana went to 200 and something. So then I 4x'd my my Solana. So what's that? 16x or is it 8x? When you 4x a 4x. Yeah. Anyways, right? Yeah, it's 16x or something like that. Probably I 16x the coins or 10x the coins. So anyways, we start with 1 year ago. Sum it up. Start with 1 year ago, right? From 99 cents to $20, from $20 to 100 and 380, then from 440, it keeps going up, keeps going up. Now it's 623, and today it's $618. So is it too late for Solana? Absolutely not. But Solana is not going to pump, you know, again like crazy, right? So yeah, Francois. So then let's go back. Let's exit this. Any questions? So any questions about me, the 5x strategy, then the 5x again, right? Like people were talking about one coin 1000x. It can happen, but it's like rare. One coin 500x, it can happen, but it's rare. And you have to have a lot of capital that you're willing to lose. So we're trying to, this step one is getting your capital up so you can make big bets. And then the big bet is what takes you to the home run, right? So from 99 cents to $600. Took this account from 99 cents to $600. Never making a deposit, right? So, yeah, so we'll exit that and we will go back to the drawing board, which is here. Hex is better. Yeah, Hex is great. Okay, so we're going to go back to Excel. So I hope that helped. Okay, so goal one, turn 1K into 5K. Just space this out. Okay. So we're back to my drawing board, right? So goal number 1, turn 1K to 5K. So the caveat is only do crypto in the top 100 market cap, because you cannot afford to lose this money. If you lose this money when you're first starting out, the odds of you coming back is like you're going to come back in 4 years, 5 years, right? You need to make money now so that you can get confidence to make the bigger plays. Does that make sense? Hex clips. Hex is not great. There are better Ponzi that give a better yield. Clips. Okay, I mean, you can say whatever you want. We're talking about strategy. We're not talking about individual coins. Patience in crypto, yes, it's key. Okay, so all right, so we've turned 1K into 5K, right? Now, the next step, turn 5K into 50K, right? So we did a 5X. Now we have 5K to play with. We're going to turn 5K into 50K. There's 2 ways. You can keep riding your winners, right? So you can, because time, when you have a winner, the Wall Street Journal starts talking about it. They start bringing people on TV, right? And then the second one is you're going to make 2 bets. And the second one is you're going to make 2 bets on lower, say 300. Okay. So you're going to have, at this point, you're going to have 3. You're going to have 3 large and 2 small. No, 2 medium. Because I'm pretty sure page 3 is over $1 billion. Or not over $1 billion, but like over $100 million still. The reason why you can't have 10 is because, well, the gas fees. Gas fees will kill you. Clips. Clips, where are you from? So number 2. Goal number 2, let your winners ride. So for example, I would say Solana. So I what Helium. I like Hex. I like Solana. I like Moonbeam, Moon River. And one more. Don't even have one more right now. I'd have to keep looking, right? Probably like Sandbox or something, but Sandbox is worth $3 billion already. Nah, not even. I won't even put that, right? It's really hard to get in my top. Polkadot has pumped like Polkador? Polka City I heard of. But yeah, like I'm really like, I have a rule. If I add one, I have to almost be willing to delete 2. So would I be, if I'm buying Moon River, am I willing to get rid of Solana or Helium and Hex to buy Moon River? If I'm not even willing to like consider that, I won't add it into my portfolio. I'm very picky. I'm not like a gambler, right? So there's 4. I only have 4. I can't even name 5. Like Ethereum, I guess. Right? Ethereum would be like holding cash because it's better than nothing. Yeah, I'll say Ethereum. Okay, so goal number 2, turn 50K into 5K. So the way that you're going to do that is you're going to have 2 bets on lower caps in the top 300. And the goal is that those 2 bets, 5X, 10X, right? So say $1,000 turns into 5,000. That's a 5X. And then your other 1,000 turns into 2,000, right? So then between those two bets, you have $7,000 in capital, and then you still have the 3K that you had maybe doubled because these are big ones. So maybe your 3K doubled. So now you have six, so you have like whatever, right? So then you just hold them over time and then you make other big bets. So this is a grind. This might take 1K to 5K can go time frame. Depending on how active you are in crypto, it can be 1K to 5K. It can be time frame, can be 1 week to 1 year. Yeah. Time frame can be 1 week to 1 year. Turn 5K and 50K, I would say time frame is like 1 year. Unless you're doing IDOs, because then you could just do that in a day. So time frame 1 year plus. Now turn 20K into 400K. The reason why I would hold ETH is just because ETH is like better than cash. People will hold USDC. I just hold ETH, right? So when I got into crypto, ETH was $70, right? So if I just put my whole life savings in at $70, it's $4,500 now, right? Bitcoin was $1,800. All you had to do is wait 4 years. It's not like genius stuff that you're doing, right? So then, okay, turning 20K into 400K can be 1 year to 3 years. Okay. You're going to have 5 times 2K bets in small caps. No, I'd say 4 times 2.5K investments. Right? And then you're going to have 10K in there you go. Okay, so now we're at goal number 3. Turn 20K into 400K. The time frame 1 to 3 years should be reasonable. And the reason is you're going to have 10K, right? In large and medium caps. This is stuff that should stay, long term. 10K over time should go to, 30, 40, 50K, right? If you lost everything, you're going to still have 30, 40, 50K. That's your bad happening. Then, so actually I should have this, I should have these reverse. This provides stability. Okay. Then you're going to have your bets, your big bets, right? On small caps. So, and micro caps. Yeah, 50K. Sorry, 50K to 400K. So that actually changes the ratio. Okay. So K means 1,000, by the way. Okay, so now it's time to play in the big leagues, right? So you might even do 35K. 35K in large caps and medium caps, 10K in small caps, and then 5K. Okay, so this is passive. This is passive. This is active. This is hard work. Okay, and then then these are going to do 10x to 200x. Okay, so let's do a recap on, how to get from, how to get a substantial amount of, all right, what should I call it? Let's just do a recap on how to get a substantial amount of investment capital in crypto by following a specific process, which is going to limit your downside and increase your upside and enable you to stay in the game. Because the number one thing that is the problem with crypto is when there's an 80% drop, all of the people that are investing go away. When Hex dropped 60% over the last 3 weeks, there was people who didn't do any YouTube, they didn't do any Twitter, they didn't do anything. It's really demoralizing when you see your money going down the drain. It is. However, the thing about it is it's time in the market, right? Time in the market is what you need. So if you don't have time in the market, you're going to have a hard time in crypto trying to win big. You're going to have a hard time trying to reach your goals. So the goals, like I said, is to get a substantial amount of crypto where you can have financial freedom. If you have $400,000 in crypto, you can generate easily $4,000 a month, $2,000 a month to $4,000 a month that you can just spend every single month over and over and over again, and not really worry about it. Where to have $4,000 a month in stocks, you probably have to have, $1 to $2 million in dividend stocks, right? So this is the blueprint. This is the blueprint to financial freedom, right? Let's call this the crypto blueprint to financial independence. And the reason why it's going to be financial independence is once you have this amount, you can take more risks, because your initial capital wasn't hard-earned money that you worked at a job for, right? This initial capital is investment capital that you earned over time, and you're allowed to take risks with that capital to make the big one, right? So the crypto blueprint to financial independence. So the crypto blueprint to financial independence, goal 1, turn 1K into 5K. You want to do only crypto in the top 100 market caps. Why? Because you need to limit your risk and control your upside, or your downside, I mean. So the time frame is 1 week to 1 year that this can happen. Happens all the time. My favorite top 100 are Helium, Hex, Solana, Moon River, and Ethereum. Okay, goal number 2, turn 5K into 50K. And then so at this frame, you're going to let your winners ride. So whatever you picked in the first step, you're going to let them ride, but now you're going to have some more risky plays. So you're going to go to the top 300 coins, right? So you're going to have 3 large caps, which are your winners that you're going to let ride, and then 2 medium caps, which are solid projects with a track record, a solid track record, and also they're just increasing in popularity and they're increasing in investments and things like that. So Helium is fairly obvious to know that Helium was going to have a run up because there was news about hedge fund managers, Bill Ackman talking about, I wouldn't buy Bitcoin, but I'll buy Helium. because helium has a real use case. Then you had Dish Network come in about 4 months later. Oh no, before that you had Andreessen Horowitz that invested $111 million into helium. Then after that you had Dish Network sign on to helium. So it was kind of obvious what was happening. These VCs all copy each other, right? They're like, what's Andreessen doing? Okay, we need to get into it. Maybe Andreessen calls the other people and gets them into it. So then goal number 3, right? So you take your 3 large caps, you let them ride. Your 2 medium caps are your high risk bets. Like I said, I just showed you the Coinbase account where I had 99 cents in the account and without depositing got to $600, right? And the only thing I did was I worked, right? And I earned $50 from Coinbase Earn. So to take 99 cents to $600 in, 2-3 years, it was like less than a year and a half, actually, the 99 cents balance, right? So you can do that. So then goal 3 is the big goal. So goal 3 is when you make large bets, and these large bets are the ones that are going to, when they 10x, that's 100 grand, right? Or when your $500 is 10xing into 10 grand or whatever, or 5 grand, it's not going to change your life. But when you have, 5 grand 10x to 50, and then the 50 10x to 500, that's when you're winning. So now goal 3 is swing for the fences. Right? So swing for the fences. You've earned it, right? So at this point, you've earned it. At this point, you know more about crypto, right? Because you've been in crypto doing this for over a year, right? You've been in the Telegram group, the GSK Wealth Builders Telegram group. You're in Discord and all these other places. Now you have the knowledge to do specifically, right? So American Psycho says, with zero invested in crypto, do you think I should wait until the end of the bull run? No. Go on Coinbase and earn $50 and then make a bet on Coinbase, right? So no, don't do that. So do not wait. You don't know when the bull run's going to happen, but I've gone through it negative 96% before. So goal 3, you turn your 50K into 400. You're going to swing for the fences. So you're going to have your passive portfolio, which is your large caps and your medium caps. These are the solid bets that you know are going to be there for a long time, right? But then you're going to have another passive group of small caps that you've done some research on. So maybe 4 different small caps that you put $2,500 in. Moon River would be one of them. It's not a small cap, but Moon River would be considered one of them. Right? And then maybe Moonbeam, when Moonbeam comes out with a token, if it ever does, that would be a great one. I don't know any others right now. This passive 1 to 10K could go to 0. This whole group could go to 0, right? So this group here, I'm going to circle this in red because the odds of it going to 0 are actually not 0, but like down 90% is fairly high. So I'm going to put that in red. Okay, and then this here, the IDOs, I'm going to put that in orange. Okay, and of course the passive, I might as well put it in green. Okay, so goal 3, turn 50K into 400K. You're going to swing for the fences. The time frame is 1 year to 3 years. And the passive is, 35K in large caps and medium caps. Another passive one is 10K, which is 4 bets at 2.5K each in small caps. And then the hard work, if you want to, is to get into IDOs. So what IDOs are like token sales or fundraising events where you get in at the ground level. The disadvantage of the IDO, it's very hard to do. You're going to have to take a picture of your passport, your driver's license. You're going to put in your address. You're going to put in proof of address. You're going to do all of these things, and that's just for a lottery ticket to get in. Then when you get in this IDO, for example, say Moon River was the IDO, Moon River is going to say, Sam, we're only accepting $40 to $250, right? Because we want to just raise 200K. And that's all we want from you, right? So $40 times however many people is 200K. So now what you're going to do, they're going to let you put in $40. Maybe they're going to let you put in $250. And the amount of time that you're going to spend to put in this $40 might be 2 hours. of your time, right, to put in $40. So what you're going to have to do is you're going to have to KYC. If you're in America, sucks. Most companies do not want Americans because the SEC is too mean, right? The Canadian SEC is not going to put you in jail. They're not going to fine you millions of dollars. So they let Canadians in. The American SEC is to be feared. So, yeah, so you're going to have to KYC. You're going to have to do research. You're going to have Twitter, right? You're going to have to follow on Twitter. You're going to have to probably be in Telegram, right? You're going to have to do all these things just to put in $40. However, um, when you hit in an IDO, right? When you hit, it's 100x to 50x, say 50x to 200x. So now this $40 times 100, right, equals 4,000. So let's make these all 14. 14 font, make them all bold. Right, so the $40 times 100 100x return, $4,000, right? And then the 250, right? The 250 times 100x return is $25,000. So now you are working. This is your job. Where before you were just an investor. So this is now your job. So your job every single day when you get to goal 3 is you're going to have to find a crypto that is an IDO, launchpad, launch phase, or a token sale, right? Then you're going to get your $40 to $250 in there. When you 100x, you turn $40 into 4,000, right? You turn 250 into 25,000, and you add that to your pot, and then you distribute some to your green zone, your red zone, and then your orange zone, right? So, and then you repeat. So this you're going to sell as soon as possible, and then you're going to keep some. So if you 100x, you should probably sell half of your portfolio or more right away, and then just move on. So this is the blueprint to financial independence using crypto, right? I should put that. Right. So the blueprint to financial independence using crypto is very, very simple. Once you get to 50K in capital, you can take bets because now the gas fees is less. Now you have the ability to risk 2 grand, and if it goes to zero, you're like, okay, whatever, because you have earned so much money, and then you're putting 20 grand bets. So for me right now, when I see a new project, I'm trying to put 10,000, 20,000 into these projects. And if I 10x, 100x, I'm good. That's where I'm at right now. Not everyone starts there, right? So you have to start at the point where you're at $40. There are people I know that are putting 200,000, $1 million in their projects, and they're turning them into $80 million, right? It's all an evolution. But by the time you get to this point at 400,000, half a million in crypto, you can do crypto full time, right? Where it's not an 8 hour a day job, right? You're sitting at your desk or at your laptop or on your phone. You're following someone on Twitter. You're talking to them, asking them questions. You invest $40, turns into 4,000. You're good. So the other day, PulsePad. PulsePad had an IDO. So this is a perfect example. Is PulsePad, and I'm pretty sure PulsePad allowed you to put in I think it was $28 is what PulsePad allowed you to put in. Now I'm going to check what PulsePad launched at. PulsePad Moon Sheet, I'm going to say. So the initial price of PulsePad was 0.001. Okay, so let me add this. So PulsePad 2021. So November 2021 example is PulsePad. Initial price equals 0.001. Okay. Current price of PulsePad. PulsePad price. CoinMarketCap. 36.83. 36 cents. Right? Current price equals 36 cents. Okay. So what is the ROI? Well, it equals 0.36 divided by 0.001. 360x. So this happened this week, right? This week there was thousands of people that bought PulsePad, and I think that the highest tier was $280, right? So thousands of people turned $28 into $10,000 in one day, basically, on PulsePad. Francois Sanchez, thanks very much for your work. Bedtime here. See the rest tomorrow. Follow you daily. Thanks, Francois. Thanks for coming out. You asked great questions, and definitely get involved right away. Right? So we had, thousands of people turned $28 into $10,000 with PulsePad, right? And then you had hundreds of people that turned, $280 into, $100,000 on PulsePad. And of course they dumped, right? So the project hasn't done anything. This is the blueprint, right? So if there's any other questions, I'm going to wrap it up here. I think, I think this helps. I think this helps people, get the gist of it. Francois, stay a little more. Very interesting. So yeah, your job becomes KYC, research, follow on Twitter, and being in Telegram. Not that hard, right? You could be doing worse. You could be, mopping millions of square feet of floors, right? So, that is all I have. That is all I have. So I will take this, I will tweet it. Actually, no, I'll post it in the Telegram. So I'll post this little blueprint in the Telegram chat, and then anyone in the Telegram chat can share it with the rest of the people that they want. So that's the blueprint. Living in the US hurts my chances for that, but that's a crazy return. Yeah, living in the US is tough because the US government's just so, they like to flex on people, right? So we were like, I ain't going to jail for letting some American put 28 bucks in an IDO and it was a security. I'm going to jail over 28 bucks. Nah. So they're like, we'll just take people from all of Europe, Canada, Mexico, right? Asia, and do that. So I just posted the blueprint in the Telegram group, Crypto Blueprint to Financial Independence using crypto. That's what it is. So, do you stake? And if so, what coins? What coins do I stake? Hex. I stake Hex. So that is the only coin that I'm staking right now. Let's see. Let me see my APR on Hex right now. I'm just going to check. I'm going to log into my Hex account, see what my APR is. I'll post that also in the Telegram group. So I'm going to start posting things more often in the Telegram group just to keep it private between us. And if you want to join the Telegram group, there's a link below that you can join. So I'm on go.hex.com. I stake. So I used to stake everything. I used to be on Pancake Bunny. I used to be on, yield, farm maximizers. I do stake Solana. I stake Solana. I've been staking. So the Solana that I bought in March, like I bought Solana on Coinbase in August, but I bought Solana in March as well, and I staked that, and it's still staking. I've never even touched it. So let me go to stake. Let me rank my stakes. So currently my Hex stakes, I have in one wallet, I have 1, 2, 3, 4, 5, 6, 7, 8, 9 stakes, right? And in my 9 stakes, my best APR is 34% annual, right? So that one's ending in like 2036. So I'm going to make 34% annual. It's going to decrease until 2036. And then, then I have some that are like until 2023, which is doing 14% annual. So 14% more Hex per year until 2023. So yeah, so I'll just post that. I'll post my Hex APRs in the Telegram group as well. Also, so someone suggested I get better cameras and stuff like that. So also today, what I'm doing is I'm using, I think my webcam died. My phone died. So I was using my phone as my video device for most of it, but I'm pretty sure it's not gonna work. So I'm pretty sure that the quality was much better this time than the other times. So, but we won't know. So thank you very much. Thank you very much, everyone. And this is the GSK Wealth Builders show. Right, I'm adding new content. I'm going to try and add new content weekly. Turn your notifications on. Follow me on Twitter. But join the Telegram group. That's the best way to do things, is join the Telegram group, because that is where all the action happens. And Matt has posted something. What is Matt talking about? Domer joins Crypto Signals group. Oh, it's a nice little thing. So anyways, thank you very much, everyone. Thank you very much. Haha, true. So I tried to stake 400 US dollars in ETH to Hex, $200 in gas fees. What about Pancake Swap? Pulse Chain will solve that. So just watch my Pulse Chain video. gas fees are $50 for swapping on the ETH network. Yeah, it's crazy. Thanks for the info. We'll check. So yeah, Pulse Chain will solve that. Just wait for Pulse Chain. Then we have Matic and all these other things. So try to go on Polygon maybe. But yeah, that's where we're at. So thank you so much, guys. Thanks for the support. And I hope this video was very informative for you, because we need to be smart about trading crypto and smart about investing. So take care.